one of the things you can that is different about trading INX is, you know, it's a US registered security with absolute transparency. Our profiles are are out there. Everyone knows, everyone in the management team and everyone associated with the project, and everyone stands there and says, yes, we're transparent, come at us. Because we know that what we're putting out there is what we believe to be the best that we can put out there.
All right, welcome back everybody to Altcoin Daily. My name's Austin, very happy to have on the channel. You've probably seen him on Fox Business or any number of those financial shows. Douglas Borthwick, CMO of INX, and all around good dude. Man, thanks for being on.
Hey, thanks for having me. It's great to be here.
Absolutely. Now for the folks at home, the agenda today is to find out all about INX, what it is, how it's, and why it matters to the average person in this cryptocurrency realm, but also just talk big picture crypto in 2021. So let's start off with that. And maybe for the folks at home, Douglas, how did you get into cryptocurrency originally?
You know, I've been a currency trader for 25 years. I got out of Yale Business School and I went right to Morgan Stanley. 10 years I ran regular currency trading businesses, working in New York, Hong Kong, Tokyo, London. I ran a proprietary trading business at Merrill Lynch, and I went off to Standard Chartered. So I've been in the currency game for a long time. And my job was to sort of see weaknesses all around the world in different countries. And when I saw a weakness, I'd go there and try to devalue the currency. I'd talk about it with lots of investors, have them join me, and we'd, you know, get together, I guess like a Reddit board, and we'd go after a currency and we'd devalue it. And after a while, you know, we talked about the dollar always as being the least dirty shirt. It was always the place to go to. But I started to feel in my head that, you know, the dollar's actually getting really dirty. But it's not just that. I mean, I think that the dollar's going to devalue. And on the back of that, I had to find a hard asset to get behind and to invest in. And looking around, the obvious one was Bitcoin. Now, I didn't know much about Bitcoin. I certainly didn't know much about INX. I read Blockchain for Dummies. I sort of, you know, stumbled around a little bit, bought a little of this, bought a little of that, sort of learned what an e-wallet was. And then I started really getting into it. And you know how this is. You get into a rabbit hole and you just get deeper and deeper and deeper. And suddenly that's all you're talking about. And all you're talking to your friends about. It's all you ever think about is Bitcoin or Ethereum or mostly Bitcoin. And then, you know, as I was getting more and more into it, I realized, you know, this is something that we can do for equities. Why is it that currencies trade 24 hours a day, 5 days a week? Crypto trades 7 days a week, 24 hours a day. Why don't equities? And I never understood that. And it really became sort of a driving force for me. And I was thinking, you know, for the past 100 years, equities have opened up at 9:30 and they've closed at 4, and no one ever questions why. There's no one on the floor of the New York Stock Exchange. It's a CNBC sound studio. So all it is computers making markets. And if computers are making markets, they don't have to go home to New Jersey to sleep at night at 5 o'clock. And they don't have to read the morning paper before 9. So my view is, why can't we get this stuff trading 24 hours? And I ran into a guy in Tel Aviv called Shai Datika. It's the CEO of INX. And I walked out there and I kicked the tires on the company. I thought, you know, this is someone and this is a company that's going to change the world. And they're going to change the world because they're going to use the blockchain to create something that has 24-hour trading, 7 days a week, and fractional ownership. And this is really important because there's people all around the world that want to partake in the wealth that is generated in America from stock markets. They'd love to own a share of Amazon or a share of Nike. But guess what? It only trades when they're asleep, or they can't afford to buy one share. You know, maybe the average share price in America is $18. There's some places in the world where $18 is a month's salary. But if you could let them have a portfolio of just little shavings of shares and equity, that's pretty important to them. But at the same time, I was thinking, why is it that private equity and venture capital companies, they always get on the early stage of the company, and then they get out when it's the IPO? So the retail guy is getting locked out of everything because the big gains, and you see this probably with the Coinbase IPO that's happening now, the big gains happen for the guys that get in early, for the VCs and the private equity. So what if we could create a product that let the little guy, retail, come in on day one, pre-revenue company, just as it's starting up, and invest? And Shai went to the SEC, said, I want to do this. And ICOs were certainly something in 2017. I don't know if you remember them. You must do, and they're an altcoin. So in 2017, guys raised $25 billion. And all they did was they wrote a white paper, 3 or 4 pages saying, this is our plan. It wasn't a well thought out plan. And of that 25 billion, maybe there's a billion left on the table today. But there was no transparency. There was no, SEC. There was no regulation. People were raising money all over the place without doing KYC, AML. Shais went to the SEC and said, look, I like the idea of the ICO, but I want to make it regulated. They said, we don't think so. Good luck with that. And we came back with MWE, a big time law firm, and Ernst & Young, big time accounting firm. We said, look, we're serious. We spent 950 days working with these guys, creating the first ever security token or digital asset security, that allowed retail to buy it from day one. And this is going to be really important because before we came along, if you wanted to buy a security token or a security that traded 24 hours, 7 days a week, you had to be an accredited investor, a wealthy person. And most of the places that had these and traded them, maybe 2,000 people signed up and maybe 20 people went in every day to look at it and see where things are trading. That's not a market, that's a sandwich store. And what we said was, well, if you want to have markets in this, it's got to be available to retail. And the guy that's trading crypto, who's buying Ethereum, who's buying Bitcoin, can click on a tab and start trading digital securities. And so that's what we did. We created that first ever security. It's a new asset class. We're the very first of its kind in that respect. We decided to raise money, not with VC and private equity, but we opened up a website. And on the website, people go to token.inx.co and they can invest in our future. And that's the first of its kind. Normally, the retail guy in New York has got to wait until it IPOs in the New York Stock Exchange, or he's got to be rich and be part of the private equity company. And we've changed the game, but not just for us, for everyone. Let's say you're an artist. Let's say you're Taylor Swift and you want to raise $400 million to buy your music catalog from Scooter Braun. Well, what could you do? You could use your own 400 million, or you could go down to your fans, send out a tweet and say, hey guys, go to this website and invest, and you can buy a sliver of my music catalog. Well, let me tell you, you're gonna have 35 screaming women and other fans going to that website and investing $1,000. You get 30 million people going to a website investing $1,000. Let me tell you, that adds up to a lot of cheese. And we have the ability now to do that. Let's say you've got an actor who's got all these earnings and they're going forward into the future, and he wants the cash today. You know what I'll do? I'll tokenize that and I'll sell it to all of his fans through the same system we're doing this for INX. And by the end of the year, maybe we'll have 50 to 100 tokens, all of them like exciting projects that sort of bring to light assets that before no one could ever own. You don't have to be a rich guy anymore. Now you can be a regular guy. And you can invest in things that you believe in and are excited about. How would you like to have, instead of CDs are probably before your time, but in the old days, you'd have, CD, a big CD collection or a big record vinyl collection. Now you can collect actually the royalties. And whenever your fan gets played more and more, whenever your favorite artist, guess what? Your security becomes worth more. And that's fantastic. And INX brought this to being. We created the first security, and our security and our F1 prospectus that now sits at the SEC is going to be a roadmap for every other person that wants to raise money from the public directly and then have it traded on an exchange. And that is magic. That's magical finance.
To me, first off, your passion makes me passionate. I love, to me, it seems like sort of the logical next step in terms of what artists or just companies in general are looking for. I think they agree that it's sort of a broken system, or at least a system that needs to be upset. And I do want to talk about the INX token, but just generally, why'd you guys launch on Ethereum instead of creating your own chain?
Well, there was really no other chain that the SEC was familiar with. In 2017, end of 2017, start of 2018, ERC20 was a standard that everyone knew, because that's pretty much what every ICO was on. And teaching the SEC a couple of years in, 950 days we were there, the Liquid came out later, Samson, Blockstream's Liquid, and we looked at that and said, this would be fantastic. But you know what, by then it was already too late. So we were already on the ERC20 or ERC 1404. It's not like we could just turn around and change something. When you change a paragraph of an F1 prospectus with the SEC, all you're asking for there is another 600 lawyers to decide over the next 6 months whether or not that makes sense. And so, you know what, you get it in there and you push forward and you live with it. Now, let's say in the future that we believe that Ethereum blockchain is too expensive. Gas is too high. Well, there's a couple of things we can do here. One, you've heard of Malthus theory? Malthus, a long time ago, he turned around and he said, you know what? The population of the Americas growing, or of the world is growing so fast that we won't be able to ever have enough food to feed all these people. But what he didn't understand was that technology changes things, so that we found technological ways to create more food. And so I think that Ethereum's like that. The technology is still very, very young. At some point, someone's going to figure out a way where you can do mass transactions for a low cost. It just hasn't been designed yet. But if it ever got to an extent whereby it was too expensive, what we do is we pick up our token and we put it on a different line. We put it on a different chain, stick it on Liquid. And that's the beauty of security tokens and the way that they're designed, in that your cap table all the time. So I know exactly who owns my tokens at any moment in time. And I could freeze it, pick it up, put it on a different chain, away you go.
Interesting. I've heard you on Fox Business. I think you gave obviously a huge Bitcoin bull, 300,000 Bitcoin prediction. No,
that wasn't my prediction. I said that someone else had said it was going to go to 300,000. I think it's going much higher. And I'll tell you why. Because when you look at the number of Bitcoin that are sitting on exchanges, it's going down every single day. And when Saylor comes in and he buys, $1 billion here, or Tesla buys $1.5 billion there, all they're doing is they're taking things away and they're locking them up in cold storage, and it'll never see the light of day. This isn't like equities. You got an equity, someone buys it, goes up 10%, they sell it. With Bitcoin, people hold it for years and years and years. And you don't have to sell it. Most people won't sell it, because if you sell it, guess what? You got to pay capital gains. But if you hold it, well, you could get yield on it. You could stake it in some way. You could, borrow off of it. There's lots of things you can do, but you don't have to sell it. And so people take it, it leaves the exchanges and never goes back. And maybe I think a couple of months ago, there was 3.5 million Bitcoin sitting around in exchanges. That number is a lot lower now. And if you think of this as a piece of cheese, at first in 2017, it was little mice biting at it. Guys with 30 followers on Twitter. They were telling their moms it was going to go to 20,000 Bitcoin, and everyone's like, these guys don't know what they're talking about. Today, it's huge rats just biting and biting, getting bigger and bigger bites out of it. But they don't have 20 followers. They've got 150,000 followers, or 1 million followers, or 30 million followers. And they're telling all their friends, you got to bite in there too. And these aren't guys that are taking $5,000 positions like it was in 2020. These are guys taking $1.5 billion positions. And so you're dealing with big boys now, and it's not the guy in his basement that's going around telling everyone it's going to 20,000. It's guys like JP Morgan saying it's going to 176,000. Guys like Citibank that say it's going to go to 300,000. Guggenheim Partners who say it's going to go to 300,000. It's all of the big boys. Even Mass Mutual, your grandfather's insurance company, is buying Bitcoin. I don't know of anyone that isn't. And the only reason your bank right now is telling you don't buy Bitcoin is because they haven't figured out a way to make money on it. Now, when they figure out a way to make money on it, you can be sure they're going to be throwing it down your throat every time you go into the store, or your ATM will be showing it, and they'll be charging nice big hefty fees, and that's going to be it. But one of the most exciting things about Bitcoin is what it's sort of opened up people's eyes to. The OCC, it's called the Office of Comptroller and Currency. Now, no one's heard of this boring federal agency. These guys are in Washington, D.C., and they turned around the other day, 2 weeks ago. They said, listen, banks, you send these things called SWIFT payments and ACH payments. Think of a SWIFT payment. It's like when you're told to wire something. Your landlord says, hey, wire me the first 3 months' rent. You got to go to the bank or send a wire, $25 it costs you to send that thing. And maybe he's going to pay $25 once it gets deposited. There's a lot of fees there, and maybe it takes a week for him to get it. The OCC told banks, we don't want you to use these SWIFTs anymore, ACH. We want you to use stable coins. It's instantaneous, and there's no fee. I can buy $1 million of USDC today, and I can send it over to you. Guess what? It's going to cost me maybe 24 cents, something like that. And you're going to get it right now, instantaneous, in your wallet. There's no waiting around a week. There's no, oh, you know what? We're just checking to make sure it's all good. It just happens. And that's the beauty of the blockchain. It doesn't get lost in the shuffle. The record is there, it's immutable, and it happens instantaneously. And so Bitcoin has been like that sort of gateway drug into getting people interested and getting people involved. It's the sun that everything's gravitating around, and it's just getting bigger and bigger and bigger. But right now, you've got all of these satellites going around that sun, things like stable coins that are going to get a lot more interest. The crazy thing that upsets me is you watch CNBC and they always say, oh, I don't know, you can't buy a cup of coffee with Bitcoin. It's not for buying coffee. Bitcoin is for taking your wealth and storing it so it doesn't devalue. Now, you've spent your whole life probably hearing from your grandparents or your parents, and they say, you got to buy real estate, it always goes up. Real estate doesn't go up. Here's the dirty secret. You've been taught this, but it's not real estate going up. It's the value of your dollar that's going down. I know this. I was a bright guy coming out of Carnegie Mellon in 1992, a long time ago. And I was working on Wall Street, and they were saying, we'll pay you $35,000. I was like, this is great. This is fantastic money. These days, a first-year analyst on Wall Street, maybe it's $180,000. Now, they're not a lot smarter than, not 6 times smarter than me. The price of the dollar's gone down that much since 1992. That's just, what, 30 odd years. I mean, that's the crazy thing. So you look at your house and say, wow, it's up 50% in the past 10 years. No, that's not true. The dollar's down that much. And people don't understand it because that's not how we're taught in school. We're always taught that's a great investment, but you're not taught that the dollar's a bad investment. And what Bitcoin's doing is it's teaching every one of us that the dollar is a bad investment. And I'll give a great example. Bring up a chart, the value of the dollar from 1930. It's not $1 anymore, it's like 5 cents. But then you're always taught when you're in school, the power of compounding. And I'm sure you've seen those charts. It says, oh, look, if you invest $1 when you're 6, by the time you're 30 or 65, guess what? It's like $28. Yeah, that's right. When interest rates are above 0, but right now interest rates are at 0 or negative in Europe and elsewhere. So I give you $1, and next year it's 95 cents, and next year it's 90 cents, and then it's 85 cents, then it's 80. Why on earth am I going to keep money at the bank? With a stable coin, I can buy $1 million of USDC. I can put it over at BlockFi or Celsius and get 10% interest on it and have the same liquidity. Oh, I owe you money here. I'll just send you some USDC. Why am I keeping it at the bank? The average person at a bank takes out $40 every time they go to the ATM, and they pay a $2 fee. Let's just go over this a little bit. Hold on. So I put my money in the bank, I get 0.25%. But every time I take $20 out or $40 out, I pay 5%. $2 out of $40 is 5%. People complain about fees on Ethereum. I mean, forget about it. The bank is fleecing you every single day, and you don't know it because you don't even think about it. You're like, I'm just going to the bank. It's convenient. The ATM's right there. Yeah, but they're taking 5% from your pocket every time you go. And that %. But for the average American that takes out $40, they're getting absolutely hammered in fees, and they don't even notice it. They don't realize it. It's great for the banks. But once people understand this, because their education level goes up because they've been following Bitcoin and crypto, good luck to the banks in being able to keep their business, because people are going to flock into the crypto space.
I love that. I think you're dead on in terms of like how fast this space is moving, one with Bitcoin, but just, you know, the banks are doing their own marketing, why Bitcoin is valuable, and the Fed too, and everybody that prints money. For this cycle specifically, DeFi is huge narrative. Stablecoins are on Ethereum, DeFi's on Ethereum. Do you ever think we'll get to a point where institutions are adding Ethereum to their balance sheet, or because it's not hard money, do you see them as two separate things?
Well, it's two separate things. I think that, you know, there's two things you need in this economy, or there's two things in the old economy people like. They like gold and they like oil. They like oil because people need fuel. And Ethereum I look at as being fuel, it's gas. So if there's a lot of things trading on that Ethereum blockchain, they need a lot of gas. And so if you can hoard the gas, well then guess what? You won't be paying higher prices later on. And as they put more and more trains or securities or stable coins on the Ethereum blockchain, the price of moving things around is going to go up. So you may as well lock in your gas prices today. So I think that, yes, there will be hoarding of Ethereum at some point, but people aren't thinking that right now. Right now, the hardest thing is just convincing their investment committee to buy Bitcoin. And that's just mind-blowingly hard for a lot of funds because they've got to change all the prospectuses. There's so many things you have to do if you're a registered, broker dealer, or if you're a registered fund in the United States. We need so many approvals from regulators and everyone else. Let's just get the Bitcoin through first, and then we'll worry about the Ethereum. And that's the thought process. But yes, I see the value of Ethereum going much higher, but that's only because you've got a train track, the Ethereum blockchain, that's got a heck of a lot of trains on it. And those trains right now, there's so many of them, there's so many projects on that blockchain that it becomes very, very expensive and the gas fees go up. As the gas fees go up and up and up, guess what? There'll be fewer folks trading on that blockchain. And so congestion will go down and the prices will come off. But until then, they got to force guys off of that chain, maybe onto Stellar, maybe onto Liquid. So guys are going to get pushed further and further onto different blockchains because of the pricing. And that's the nice thing about the efficiencies here.
I love that. And one final question, just for you personally, and maybe just answer as much as you're comfortable with, or just pass. But for you, from an investment standpoint, are you pure Bitcoiner, or will you dive and speculate on newer stuff?
I'm not, I don't know about newer stuff. So utility coins, I've dabbled in the past, but I think that there's a lot of hype in a utility coin, and sometimes you see something that's an idea, and it was an idea last week, and then next week it's trading with a $3 or $4 billion valuation. And I find that sort of thing to be a little bit disconcerting. I think there's a lot of folks that get into this and they say, you know what, Bitcoin, $50,000, forget about it, that's expensive. Well, look, this is 26 cents. I can buy a lot of those just in case they turn into the next Bitcoin.
Gene Simmons.
So, yeah, that's exactly what Gene Simmons says, and it's sweet, right? He's like, why would I buy that when I can buy this? Okay, not understanding that you can buy slivers. You don't have to buy just one. Now, I'm sure there's a lot of really good projects out there. I think that Chainlink does a great job, and it looks like it's going to be a really interesting project. I think Aave, also very interesting, very exciting. So there are some specific ones, but a lot of the times people get into this business, or they get into trading this, and they're interested, and they say, you know what, I'll buy $5,000 of this or $3,000 of that, hoping that they get the next big one. But it's sort of like you go into the stock market to buy Amazon, and then you see there's a lot of other stocks that are penny stocks, and you think, well, I should buy these. They might be the next Amazon, without actually reading about what exactly that project is. You buy something because it's cheap. If you're buying something because it's cheap, let me say there's cheap for a reason. Now, when a guy come to me the other day, he's like, why would I want to buy INX when your market cap is this, whereas the market cap of this other company in Switzerland is 1/10 of yours? And I said, let me ask you a question. Do you want to buy Amazon, or do you want to buy the corner bookstore? Corner bookstore, $300,000 to buy. Amazon, I don't know, billions, hundreds of billions, whatever it is, trillion. And the answer is obviously you'd want to buy Amazon because that's actually successful in making money, or it has the right management team or whatever. Whereas the other one, it's cheap, but it's cheap for a reason, because no one's going there.
Very interesting.
Let's get into INX then. So INX, simply put, from my understanding, it's a digital asset exchange, of course, and then the INX token it's a registered security. It's the native token in INX. How do we think about it? Is it like a BNB coin?
No, and it's, well, let me explain it. So the BNB coin, or that's the Binance coin, it was ICO'd back in 2017, I think, 2018. They raised $15 million. I think the value of it today is around $40 billion. Now that coin entitles you, and correct me if I'm wrong, but you can use it to get discounts when you trade. So let's say I've got a trading fee of $80, and if I use Bitcoin to trade, the BNB coin, maybe it only costs me $70. So I get a discount, maybe 10, 20%, I don't know, whatever. Now that's a great concept, but the BNB coin also, it's not registered in any way. There's no transparency. I don't know who the real ownership is of Binance. There's no, or the early days, maybe there wasn't as much KYC AML as you find, in the United States. What we said was, look, we'll create a coin, which is actually, it's not really a coin, it's a registered security. It's like Amazon. It gives full transparency to us, so you can go online and you can see our prospectus that's got how much I make, how much everyone makes in my team, you know, everything about our company, who the ownership is, and everything's gone through by Ernst & Young and by the SEC. So there's a transparency issue there. But our coin, what it does is it gives the owners, or the token gives the owner, the owners of that token, the right on a pro rata basis to 40% of our profits. Now, BNB doesn't have a profit share. But you can also, with our token, you can use it to pay down your fees. So if you're buying a lot of other security tokens and you get a fee, guess what? You can use our token to pay for those fees and you can get a discount, 10, 20%. And then we take those tokens out of circulation so there's fewer tokens out there, getting that 40% of our profits. Now, what can profits be? Look, I don't speculate, but I'll tell you this. BNB in business for 2 years was making $500 million a year in profit. After 3 years, over $1 billion, apparently. You know, these types of exchanges do well. Now, and we're two types of exchanges, actually. You know, we're a crypto trading platform like a Coinbase or Gemini. And then we've got the security token trading platform. And security tokens are digital securities like we talked about before. And we think that all securities on NASDAQ, and on NYSE and on the OTC, there's 10,000 companies in the OTC, are all going to go digital in the next 3 to 5 years based upon comments from the SEC, where the SEC said they expect that all assets can move onto the blockchain. If that's the case, you need to have guys that have digital exchanges, or ATSs, they're called, alternative trading systems, to be able to offer that service. We're one of them. I'd say there's maybe 10 in all of the United States, but the other 9, sorry, don't have a crypto business too. So we can onboard 5, 10 million people to trade crypto, and then we can say, hey, why don't you look at the security tokens and trade them as well? And all the profits that are generated from both of these businesses at the end of the year, we look at them and say, okay, 40% of the profit goes to the token holders, and we distribute it directly into their wallet. So they're holding an ERC20 token, and we'll pay them their dividend or their distribution in Ethereum. Or if they want, we could pay it in dollars into a US bank account. But the other thing about our token is if you want to buy it, and this is the first time ever for a US security, if you want to buy it, you can pay in Bitcoin, in Ethereum, in USDC, or in dollars. So you could send a dollar wire, we'll get it in 5 days. Or you could send USDC, we get that immediately. And then as soon as we get it, boom, and then in the next like 2 business days, you get the tokens delivered to your wallet. And it could be your wallet, you know, my Ether wallet, or you could keep it over at Anchorage or at BitGo or, you know, Hex, any of these sort of custodians that are now set up. And then when you want to trade these, you can just go out there and you can trade them in the secondary market after we close our IPO. And I'm not going to tell you when we're going to close that because that's not public information yet. But once it does, we'll have the INX token listed on our ATS. Now, the ATS we bought from Open Finance. Open Finance was the first ever guys into the digital securities arena. They got the first ever license for a broker-dealer and for an ATS for digital securities. And we bought that company. We finalized the purchase of it about 2 months ago, and then it should come into our ownership in the next couple of months. And then we'll have that sitting next to our crypto trading platform that goes live at the end of March. So instead of the audience being a couple of thousand people, and I think we said this at the start, that you find in current security token platforms, they've got 5,000 people maybe signed up. We'll have millions of people looking at it. And instead of 3 or 4 issuances, we hope to have 50 to 100 issuances in year 1. You know, we're going out there and we're going to change this such that people understand that, holy smokes, I can go in here and I can be trading private companies in a tokenized format and public companies in a tokenized format, 24 hours a day, 7 days a week, in fractional ownership. This is going to change everything.
I mean, it's crazy how fast this industry is moving. And one of the things you said before about INX that hit home for me is you don't have to be an accredited investor to get in. You can be, every single person is allowed to invest in this, correct?
Well, you know, it comes down to something called blue sky laws in the United States. So if you create a security and then you list on NASDAQ or New York Stock Exchange, anyone can invest in you. Any retail guy can go into their broker and say, hey, I want a piece of that IPO. But we couldn't list there because they can't take digital securities. They're back in the Stone Ages still, right? They got to close at 4 so everyone can go back to New Jersey, even though there are no people to go back to New Jersey. So what we did is we said, okay, we'll be a self-issuer. And that means then we have to go to every state and say, hey, can we sell the security in your state? Now, not every state understands what a digital security is. It was the first of its kind. So if you're in Massachusetts or New Jersey or in Florida, guess what? You can't buy it all. Doesn't matter if you're a accredited investor or a retail investor, no go. If you're in California though, or then essentially you got to say, look, I make $400,000 a year, or I got $1 million, and you got to upload a lot of stuff onto our website to prove that you're an accredited investor status. If you're in New York or Connecticut, all you have to do is show a utility bill and a driver's license. So, and same with Georgia. So we've got a list on our site of different states that you can buy. And if you're outside the United States, blue sky laws don't apply. Just make sure you're not from North Korea. So, I mean, but that's the nature. So blue sky laws limit a lot of the folks that can come in to buy it in the primary. Once we go into the secondary market, anyone can trade it.
Very cool. And do you see INX, or is it a goal for the token itself to get listed on other exchanges for you, or do you not worry about it?
Well, we'll never be listed on Coinbase or Binance or anything like that because we're a registered security and they're not broker dealers for digital assets. So what we would do is we'd love to list on NASDAQ or a New York Stock Exchange. Again, we can't do that because they're not able to accept a digital security. You know, when you're a digital security and the trades are settling on the blockchain, then you've also got to use, you know, like the back office guys or transfer agents that can also do things on the blockchain. And right now, the big transfer agents that are used by, now a transfer agent is the person that says, okay, you own this stock, and we always know who owns the stock. So when you sell it to someone else, we'll write that down in a ledger. When you're a digital security, there isn't that, right? You're on the blockchain. And so the way that the traditional exchanges are set up is they're set up in this really old way where there's an old ledger and it's not a man or a woman anymore writing down who owns what, but it's sort of similar. That's why it takes 2 days for settlement. And so these guys aren't ready for this. Now we have talked to the Canadian Securities Exchange in Canada, and these were some of the first guys to bring out, you know, like marijuana stocks and stuff like that. They're very progressive. And they've said that we'll be the first ever digital security to trade and be listed on their exchange. So that's exciting, but I don't think that's going to be anytime soon. Maybe that's in 6 months' time, but it's something. Because, you know, when you're traded on a national exchange, then all the RIAs, the registered investment advisors, and all the funds can start buying you and trading you because now they're getting a price feed coming in. And so, you know, it's important to get onto these exchanges.
After the token sale is finished and you guys launch, like what does success look like for you 5 years down the line, and what will you be working on? Well,
first, we don't have to sell. We don't have to end the token sale before we launch. It could be concurrent. We could be launched and the token's still open. And I'm not going to give an answer as to what we're going to be doing with that because I haven't publicized that yet. Now, where do I see it in 5 years? Well, look, let's look where Coinbase is in 5 years. Coinbase in 5 years, as you saw in the IPO today, is going big guns, right? They're doing very well. They got a market cap now of $100 billion. $100 billion is a lot of money. When you look at somewhere like Binance, that Binance coin where it's trading, that's doing pretty well. And that's what, 3 years old. And so there's a lot of folks in this business that have done quite well for themselves in 2 or 3 years. And I think that most of the teams there, when they went and they started, they were mostly programmers. They came from the coding side rather than from the regulatory side. And we're changing it up a little bit. And I don't know if you know this about our background, like early investors were Charlie Lee, who invented Litecoin, Ricardo Spagni, who's behind Monero. Those are like the early investors in us. And then we're joined by our board as David Whelan, that came up with the Jobs Act, was a vice chairman of NASDAQ. Nick Thedaney, that was the CEO of the Toronto Stock Exchange. Tom Lewis was the CEO of Ameritrade. You know, so we've got some heavy hitters here. You know, I'm the small guy in this totem pole. And so we've got a lot of guys that know how to scale and how to build businesses quickly. The hardest part when you have a business in an environment like this that's growing so fast, and remember, only 0.5% of the United States right now knows what Bitcoin is. There are some people that have a Twitter feed that have never seen a mention of Bitcoin or Ethereum. Could you even imagine? I couldn't, waking up and seeing nothing about Bitcoin or Ethereum all day, or any stupid videos. I can't imagine that anymore. But there's people that wake up, and that's 99% of America. So with only like 0.5% of America right now knowing what Bitcoin is, and Coinbase during busy times is shutting down, right? You can't, when the price is going up or the price is collapsing, you can't get in to sell. You can't get in to buy. And at times they turn around and say, guys, we can't take in any more people. because we're too busy. We've got too many people onboarding. eToro X just came out and said, look, guys, if your balance is below this much, we got to get rid of you. There's too many of you. And so with only 0.5% right now of America doing this, and everyone that's in the business right now is already saying, oh my goodness, it's way too, there's too much business for us. I think it's a pretty good time for us to come out. And so the challenge for us is, how do you onboard 1 million, 5 million people over the course of 6 months to a year? The average person can KYC someone, maybe 50 people in a day for one person. So you got to automate a lot of this, and then you got the manual intervention. That's the real challenge. The challenge isn't in creating a bid offer spread and having a tight price. The challenge is onboarding a multitude of people that are all coming at you at the same time. And that's exciting. So where will I be in 1 year, 2 year, 3 year, 4 year, 5 year? I can't tell you. The biggest reason is because the SEC says we can't make projections as we have an ongoing IPO. But what I can tell you is there's a lot of folks that have come out the gates not knowing exactly what the direction they're going in, and they've done quite well in this. I see success as being, in 5 years' time, if we've got the crypto trading business up and running, it'll be up and running, by the way, in a month. If we've got the security token trading business, and we've got 200-300 listings on there, all of them exciting. And I go out there and I have a new listing, and I come out and I introduce it to all of our community on the crypto side as well. To 10 million people, I say, hey, guess what, guys? We've got the Eagles, or we've got Taylor Swift's catalog, and we're going to be selling it in 3 days' time. And we put up a big stop clock. And everyone comes and rushes in because they've already done KYC, AML, and they say, look, I want to get this, I want to get this, I want this much. That's going to be pretty exciting. When we can just come in and we can do drops, not of music, but of music catalogs. Not of a movie, but of the movie's earnings. Hey, you want to earn a movie because that's about to get done in Hollywood? Well, guess what? Now you can buy into it starting tomorrow. Here's the director, here's the main actors. They're looking to raise $50 million. Boom. And we raise it in 45 seconds. Just like when you sell out, when Taylor Swift says she's doing a concert, and every mom gets on the phone and every dad to make sure they get their kid the tickets, and it sells out in 40 minutes. That's what I want to see, raising $500 million. And it all shows up on the blockchain, and you can see it as people are buying and they're getting the tokens distributed to them, and it's all in live time. That's going to be exciting. And then once you're into that, you can then click on another tab and you can start trading the futures in this. Maybe you want to buy calls in Taylor Swift's music, or maybe it's getting cold and you've got the music catalog from Mariah Carey coming on around Christmas time. And so you want to buy calls on that because you know that's going to get played a lot. And that's going to be exciting too. So for us to bring new exotic products to the market that aren't based on equity, but are based on things like, profits. Do you want to buy a share of profits in something? Do you want to buy a share of a specific item? We talk about NFTs right now, non-fungible tokens, but what if some of them get so expensive that not one person can buy them? And so then we tokenize it and we sell it to the community. So that's always going to be something. I know people in Manhattan, and they've got a Vermeer sitting on their wall, or they've got, a Cézanne, and they'll never sell it. Their house is falling apart around them, but they'll never sell that painting. Well, how about I tokenize that painting? And you can sell 49% of it, but that painting can always be up on your wall because people want exposure to that. So the next time a Cézanne closes at an auction somewhere, the price of all Cézannes goes up because you've got exposure to that because of the ownership of that. Guess what? Your share goes up too. So you don't actually own it in your pocket, but you own a little bit of a Cézanne. Think about calling up your friends and saying, yeah, I own a Cézanne, I own a Chagall, I own this. I mean, that's fantastic. And people do that right now with real estate. They're called REITs, real estate investment trusts. You don't actually own the real estate. You never get the keys, but you own a slice of real estate in a share format. We're going to do this for paintings. We're going to do this for art. Heck, I've had people come to me and pitch me horse semen. Let's get this one. So you got a racehorse, and he's got all these bottles of it. And when his kids do well in a race in the Kentucky Derby, this stuff's worth a lot of money. Who knew? And so you could be betting on that during the game. Or how about sports stars? You get an athlete. I was on with David Meltzer the other day. I don't know if you know him. He's like the guy from the movie Jerry Maguire was based on.
Ah, nice.
And I was on his show, and we were talking about tokenization. And you get a sports star, and that sports guy early in his career, he wants $10 million. You know what? We think he's a great guy. We saw him in college. Let's raise 10 million for him, but maybe we get 30% of his profits that he makes going forward in his career. And then when he's playing in the game and he catches that save at the end of the Super Bowl, and you know that his contract's going to go up, everyone's going to be not betting, they're going to be buying that security on our exchange. Because guess what? He just got that winning score. And these are the things that we're going to be introducing. We're going to be showing people ways that you can raise money and ways that you can finance things and ownership structures that just haven't been created before, because right now they're in here and we're about to make them out there.
I love it. And for me personally,
let's say I think that your show is going to be fantastic. And I say, look, guys, I'll give you $10 million today, but I want 40% of your stream going forward. And then I take that 40 million and I sell it to 40,000 people. And these 40,000 people come in and they log in every day to your site and they send it around to all their friends because they want more people to watch it, because they want to see your revenue stream go up from advertisers. And so now you've got a marketing department of 40,000 people going on Twitter saying, you've got to watch Altcoin. You got to watch these guys. These guys are the best. 40,000 people every single day telling all their friends. And you know how it works. They tell 10 people, 10 people tell 10 people. And soon the whole world's watching you guys because you sold a percentage of your revenue stream to people that now are incentivized to market for you. And you get the cash up front.
I love that. I love that future. And for me, when this channel is tokenized, but more so when horse semen is tokenized, that's when I know we'll be at mass adoption.
Dude, there's so many things that we can tokenize. It's absolutely crazy. So, you know, you can tokenize all of equities. That's a couple of $100 trillion. You can tokenize all of the wire transfers. That's in the quadrillions of dollars. And every time someone does one of these transactions, we, as an exchange, would take a fee. So, and what we're saying is, if you own our token, guess what? You can get 40% of that. 40% of the profit. I think that there's a legal term for it. It's like net operating cash flow, but it's all in the prospectus.
And you touched on this, but I would love if you could maybe go a little deeper on the team. Because usually when I look at cryptocurrency teams, it's usually like the who's who of who's that. Like I've never heard of them before, but especially your advisors and the C-suites like Silbert and stuff like that. I've heard a lot of these guys. Could you just highlight some of the top team members?
Well, we got to start with the CEO. So the CEO, Shai Datika, started a company called ILS Brokers, an interdealer broker in Israel, and then had another company that was selling options to individuals that onboard like 3 million people just in a couple of years, depository clients. Huge, very impressive. You get Alan Silbert, obviously. Alan's my colleague in the United States. Alan, you probably know his brother Barry, but Alan is famous and well. I think he did the first ever real estate transaction for Bitcoin, and he had a service set up for that. We've got for blockchain a guy called Jonathan Azarwal. John's background was he came up with a company called BSave. BSave was, I guess it turned into Celsius. It was a company that you would sit there and you could lend out and borrow Bitcoin on it, and it's founded in Europe. We've got Paz Diamant. Paz is our CTO. You may be familiar with him because he created the eToro X platform. In terms of, so that's sort of like the man. We've got Maya Noor. Maya, incredible female who's a product designer for us. And what she's worked with Shai for, I don't know, 15 years or something, and in all the different businesses that he's had. And it's just an incredible job in giving you that touch and feel of the product that makes it so you want to actually trade on it. And then in terms of, the advisors, I mean, you've touched on a couple. Samson Mao, I don't know if you know Samson. Samson's a real diehard Bitcoin guy. He's with Blockstream. We're going to be listing his token, Infinite Fleet, because he also has Pixelmatic under his portfolio. If I went through all of Samson's titles, we'd be here all day. Jameson Lopp was one of our advisors, another Bitcoin fellow, at Casa. Really incredible, very, very smart. On Fox, we've got Pete Hepseth. I don't know if you know Pete from Fox and Friends, but he certainly is a very knowledgeable guy. We've got Jason Moon for security. Jason Moon, maybe not a name you're familiar with, but he reminds me a lot of Jason Bourne in that if you can hack into something, this is the guy you want to be on your site. We've got an incredible team, and I'm sure I've forgotten, I'm not mentioning a lot of the folks that are on there, but you're right, there's a who's who of folks that have come together from the blockchain and from the legacy space to create something with regulation in mind. And what's crazy is in 2017, the team was together, 2018. But instead of going out there like Binance did and just rushing out the gates and saying, let's make money, instead we said, let's go to the SEC and let's build a strong foundation. Because when you work in the United States in this type of environment, in the financial services, the most important thing is having the right foundation. And it's taken us, 3 years to get to this spot where we're about to go live. But in doing so, we're a pretty clean shirt. We haven't upset the regulators. We haven't listed something that some people call security, but others say is a utility token. I think XRP would be a good example. I mean, think of that. You've got every single crypto trading platform that doesn't have a broker-dealer license listed something that the SEC says is a security. Well, that seems to us to be a problem. And when you look at our F1 prospectus that we filed back in 2018, we mentioned every cryptocurrency except for XRP because we knew at the time it was probably going to be known as a security. And so, look, we've got a great team, a patient team, one that's been building a foundation for a long period of time, and one that we're just ready to go out there and strike. We're ready to go out there and hit this market running. We've been planning for a long time. We've got it all set up. It's go time.
I love it. And we have more questions to ask you, but I mean, we'll definitely put the link down below in the description. But what's the best place for people to continue their education on INX?
Yeah, just go to token.inx.co, token.inx.co. That's all you got to do. And we'll lead you all through the process. You can learn all about us. There's links to the prospectus as well. And also you could go into the Telegram group, look up INX Limited community, INX community on Telegram. And, we'll welcome you there.
Nice.
Cool. I just had like a final big picture type question. Is there anything about INX in particular that we haven't touched on yet?
Well, I think that one of the things that is most important is the fact that you'll be able to go back and forth between crypto and securities. And that hasn't been done before. And the reason is because the retail guy trading Ethereum always had to jump up to be an accredited investor to trade in securities. And now we've broken that barrier down. And so that's why the millions can now go in there. The Redditors had a couple of things a couple of weeks ago that they were upset about. And we should touch on this. They said, listen, I want to set self-custody. Why is it if my stock is held at Morgan Stanley, they can rehypothecate it, lend it to someone that wants to sell it short? That doesn't help me. Morgan Stanley gets paid 15% and I get nothing. With a digital security, guess what? You can take it out and you can stick it on your drive and your Moo wallet and walk away. No one can borrow it. You're in charge of it if you want to be. They also said, look, we want to trade 24 hours a day, 7 days a week. I've got an 18-year-old son, 4 o'clock hits. He says, what am I going to do now? Guess what? We're open 24 hours a day, 7 days a week. You can get involved. You can't do that with regular securities. I think the Redditors also said that they didn't want to be told that you can't trade on this exchange, or they didn't want people to say you can't do it anymore. Well, guess what? If you're self-holding it on your wallet and I'm not showing you a price on something, then go to the next guy and load it up, or do a peer-to-peer transfer, because you can do that as long as the other wallet's gone through a whitelisting process. You can sell it peer-to-peer. You don't even have to use an exchange. And that's the beauty about digital securities. It's incredible that you can do this now where I could own Nike. I could send it to you right now if it was in digital format. You could now have it. Nike would know now that you own it because you've also whitelisted your wallet with Nike, so they know. And whitelisting is something that we take very seriously. And this is like the AML, KYC. It's really kind of boring stuff, I think, for most people. But what it means is, if you own an INX token and you lose it, that's no problem. We'll send you the new ones and destroy the old ones. We can do that because we know that you owned it. We know that who owned it before you did. And before that, and before that, and before that, we've got a record. So you can't lose an INX token in a boating accident. You can't put your 401k in INX and then lose it because we know you had it and we can get it back to you. This isn't like Bitcoin. Know your keys, the whole spiel there. It's not like that here, because here we're dealing with US registered securities, and there's certain rules and laws that we had to come up with, that we had to actually derive so that the individual investor is protected. You want to see what our results are? That's great. Go to the Edgar database. You want to read all about us? Go to the Edgar database. If you lose your tokens, no problem. Here's new tokens. If you think you put them in your wallet, but you lost your wallet address, no problem. We'll destroy them. We'll give you new tokens. These are things that we can do now for securities. No one could do before. Let's say you've got bearer holder receipts for Nike stock and they were burned down in a fire. Well, good luck. Nike's not going to give you anything. They were holders. But at the same time, if you lose your INX tokens, no problem. Here's the new ones. And this is, it's giving you a lot of, I think, comfort. And it's something that hasn't existed in this space before.
Cool. Very interesting. I'm really glad you came on. This has opened my eyes. Like it's interesting to see how the regulated world is coming in to the cryptocurrency world, which has traditionally been anti-regulation. Well,
it's funny you say that. When we first came out, I think that the Bitcoin maximalists all looked at us and said, what are you guys doing? You're putting KYC AML. Are you trying to replace Bitcoin with the INX coin? We're saying, no, guys, we're a security. We're not a coin, we're a security. We're not trying to infringe in any way. Now, yes, we do have KYC AML on our token, but that's just because we need that from the SEC. Now for securities people, and that's 85% of the United States that trade securities versus 0.5% that trade crypto, they turn around and say, oh my God, this is like a leap forward. This is a huge leap forward. Are you kidding me? 24 hours, 7 days a week trading? Knowing your cap table? This is crazy. So most of the population looks at what we're doing as being, this is like stepping on the moon. And there's that 0.25% or maybe 0.1% that are Bitcoin maximalists that say no token should be out there other than Bitcoin. Well, look, we're not trying to compete with Bitcoin. All we are is a regulated security in token form. And one of the most interesting, I think, Twitter exchanges that I saw when we first came out was between Vitalik and I think it was Adam Bach, and there was a discussion of like, what is INX? And I think Vitalik said something like, it's a regulated BNB. And I think that that's fantastic. We had two of the greatest minds discussing us at the time on Twitter, because look, we're not trying to be a blockchain. We're not a blockchain. All we are is a security that trades on the blockchain with exposure to the trading of securities and blockchain products. That's it. And the nice thing about trading us, or I wouldn't say nice, I don't think I can say that. One of the things that is different about trading INX is, it's a US registered security with absolute transparency. If you want to find transparency in sushi, good luck. If you want to find transparency in any DeFi project, good luck. If you want to find someone to blame and sue if something goes wrong, that's not going to happen. With the INX, we stand behind it. Our profiles are are out there. Everyone knows, everyone in the management team and everyone associated with the project. And everyone stands there and says, yes, we're transparent, come at us. Because we know that what we're putting out there is what we believe to be the best that we can put out there. And we believe that transparency is key. And when you look at blockchain projects, I think you'll admit they've been in a very dark area of the world for a long time. And we just want to shine a light on it and say, guys, you can walk into this and get full information.
Very cool. Very cool. I have two final questions, big picture cryptocurrency questions that Douglas, we like to ask a lot of our guests that come on the show. So if you were investing, or how would you invest $1,000 in cryptocurrency today if you were newly coming into the space? Or maybe if your son, 18 years old, he's like, Dad, I'm trying to get into crypto. How would you do it?
Well, my son's been in crypto for a while. He's been super excited about it. I think that, yes, I think that if you were to get into it, I think that really there's two big boys, and that's obviously Bitcoin and Ethereum for the newbie when you come in. And I'd say it's probably like a 60-40 or 80-20, 70-30 split where you've got the majority Bitcoin, a little bit of Ethereum. Now, Ethereum hasn't done a catch up yet. I think Ethereum could go much higher. I agree with the story that it could be in 5 figures for sure, but not today, not tomorrow, but certainly it's going to have that march higher once other folks get behind it and gas prices start getting more expensive. It's like if I could go to the gas pump when it's trading at $1 and put it all in cans and keep it for a later day, I would. And so that's what I think about with Ethereum. With Bitcoin, I just know that the adoption's coming, and it's coming steadily, and it's coming, all the time. And the other thing is, you don't have to put $1,000 into it at once. Instead, what I'd do is I'd say, you know what, buy $50 every single day. Just do that on a steady basis. So you've got this sort of like This is what the institutions do. They don't come in and buy $1.5 billion right now. They buy, $1 every single minute. And that way you get a nice weighted average. And that's how we do it in currency markets too. So just weight your average. But at the same time, you don't have to invest all at once. Just get a taste. You go to somewhere like Coinbase today, you can also learn about things. You can watch videos. I know I'm telling you to go to the competition, but we're not live yet. But go to the videos and you can read about what Graph is, or you can read about all of these different projects, and you can just start getting into the rabbit hole. And then start getting Twitter, start following all the folks you think you should follow on Twitter. So you've got that running stream of information. Go on Clubhouse and start watching and listening to all of these. Just walk into rooms and listen, ask questions. And then start following guys like yourselves, where you come in there and you get that education on a daily basis. Look, my son doesn't get his education from me, he gets it from YouTube. And that's the reality for anyone that's 18 years old. It's either from YouTube or it's from TikTok. No one listens to their father anymore. And so that's where the education is. That's where people learn things, and that's where you should go, because you're going to learn stuff quickly and fast doing it in that manner. And there's lots of different projects out there, but I wouldn't jump into the projects first. First, I'd have a little taste of the Bitcoin, just so you can play in it and watch it and get a feel for it. Because once you've set up that e-wallet, you're going to be in again and again and again and again. The hardest hurdle that I find is convincing someone to open up an e-wallet. They're like, what are you talking about? And I'm not talking about a Trezor, or I'm not talking about anything, or a Moo wallet. I'm talking about just opening up a wallet somewhere, because they're used to always getting money put in their bank and securities put over at their E-Trade. And so opening up something else is to them sort of new. Then they worry, what if I lose my password? Well, look, don't lose your password.
And what coins does your son like? Do you know? Obviously he likes Doge if he gets a lot of information on TikTok.
He's not touching Doge. He's got Ethereum and Bitcoin, and that's it. And if he ever veers away, he gets a stern glance from me. But look, I'm happy. And Bitcoin's more about just Bitcoin and money. It's about learning about saving. Because you get kids, and kids just want to take money and they just want to spend it. And he'd rather spend it, oh, I need this new stereo, I need this, I need these headphones. And if you say to him, look, why don't you hold off, invest in this, there's a possibility that in a couple of weeks' time, you could buy 3 sets of headphones. And once he's seen that once or twice over the course of a month, or he's seen a downdraft of 20 to 30%, and then it come back in so he gets his confidence behind him again, or her, that's the sort of thing I think that's important. Is you've got to, one, let people get used to the volatility. 2, make sure they have a position size that they can afford to lose. And 3, though, it teaches saving, and it teaches monetary economics. It teaches you the fact that, the bank is screwing you up. It teaches you the fact that there is a way to save, and when I see him and he scrimps based off of the money I give him each month, and he saves a bit and he throws it into Bitcoin or Ethereum, it gives me a little bit of pride, because now I know he's saving. Because when I told him to put it in the bank, it never went in the bank. It went on to candy. I don't know what it went on, but it disappears very, very quickly when you've got teenage kids. And so now I'm actually seeing it grow, and seeing something grow, and seeing your kid talking about how he doesn't want to spend, instead he wants to save. That gives me a great amount of pride.
Very cool.
But crypto does that, right? Once you get into it, you think about, do I really need that flash car? Or maybe I should put it into Bitcoin and trade the crappy car, because I could buy 10 flash cars tomorrow. And I think that people think like that in crypto. In the early days of crypto, it was, let me buy a pizza, right? Or let me buy a Lambo. And now I think the guys that bought a Lambo when it was trading at $16,000 are now kicking themselves because they could have bought the whole dealership. And no one wants to be the pizza guy. And this is why I say no one spends Bitcoin. Why would you spend Bitcoin on coffee? You don't want to be the pizza guy. You want to be the guy that's sitting there by the time you're 65 and say, you know what? Did pretty good on that. Did pretty good. And if you didn't, so what? It wasn't a big enough chunk for you to worry about. Don't ever invest what you can't afford to lose. And don't ever invest what you're not, don't ever invest in an amount whereby if there's volatility, you're going to be worrying about it. Just make sure you put in enough so that you can sleep at night and you're not worried. You don't have to check it every 2 seconds. If you're checking every 2 seconds, position's too big.
True, true. I don't know about you, Aaron, but I truly do feel so much more clarity on what INX is offering. Great interview. Douglas, man, I appreciate you coming on. I hope you come back again.
I hope so. Thank you very much for having me, guys. Really appreciate it.